7 secret ways banks steal your money. The banking system is one of the most critical systems in the modern society. Banks provide us with services that are essential to our everyday lives. We all want to keep our money safe, and banks offer us a secure place to store it. However, many people are unaware of the various ways that banks make money from them. In this video, we will discuss 7 ways banks steal your money. Welcome to Leopard Finance, the channel where you can learn all about personal finance, investing, and wealth building. Do you want to learn how to make your money work for you? Then you're in the right place. I've spent years studying finance and I'm here to share everything I've learned with you. So, if you're new to this channel, please click the subscribe button for more types of videos like these and ring the notification bell so you won't miss one. Let's get right into the video. Secret number 1. You are losing money every year. Many people believe that the bank is the best place to keep your money safe. However, few people realize that they are losing money every year by keeping their money in the bank. Inflation is the increase in the price of goods and services over time. In 2022, inflation rate in the US was 8%. If the money you have in the bank yields 1%, you are losing up to 7% of the value of your money every year. This means that an item you could buy for just $50 in 2021 would cost you $54 today, and much more in 10 years. If you want to keep up with inflation, you need to invest your money in platforms that yield returns. Secret number 2. Banks earn from your card transactions. Banks earn money from your card transactions through a process called interchange fees. These fees are charged to merchants who accept credit and debit cards as form of payment. The interchange fees are percentage of the transaction amount and are paid by the merchant's bank to the cardholder's bank. The cardholder's bank earns a portion of the interchange fee as revenue. This revenue stream can be significant for banks, especially for large banks that process a high volume of transactions. Some banks may also charge additional fees to cardholders, such as annual fees or foreign transaction fees. In addition to interchange fees, banks may also earn money through a rewards program associated with your credit and debit cards. Cardholders earn points or cashbacks on their purchases, which are funded by the interchange fees and other fees charged to merchants. Secret number 3. Banks charge fees for basic services. Banks charge fees for basic services such as checking and savings account, ATM usage, and overdraft protection. Many banks charge maintenance fees, which are fees for keeping your account open. These fees can range from a few dollars to hundreds of dollars a year. Banks also charge ATM fees for using another bank's ATM. These fees can add up, especially if you use ATMs frequently. Additionally, banks charge overdraft fees if you overdraw your account. These fees can be as high as $35 per transaction. But before we move on, please comment below if you can relate to the video. And if you find this video helpful and interesting, please consider liking the video and share it to your loved ones and friends. Back to the video. Secret number 4. Banks make money from investments. Banks invest their customers' money in various investment vehicles, such as stocks, bonds, and mutual funds. Banks make money from these investments by charging management fees, which are fees for managing the investments. These fees can be as high as 2% of the asset under management. Banks also make money from selling investment products to their customers. These products often come with high fees and commissions. Secret number 5. Banks profit from loans. Banks profit from loans in several ways. First, they charge interest on the money they lend. The interest rate is the cost of borrowing money, and it's how banks make money or loans. The interest rate on a loan is typically higher than the interest rate paid on deposits, which is how banks earn a profit. Secondly, banks may also charge fees for various loan-related services, such as loan origination fees, late payment fees, and prepayment penalties. These fees can add up and increase the overall cost of borrowing money. Additionally, banks can make money by securitizing loans. This involves bundling loans together and selling them to investors as a security. These investors buy these securities. They're essentially buying a portion of the loans and the interest that will be paid on them. They allow banks to generate more revenue from the loans they issue. Secret number 6. Banks sell your personal information. Banks collect a lot of personal information about their customers, including their names, addresses, social security numbers, and financial histories. This information is often used to assess creditworthiness, manage accounts, and prevent fraud. However, some banks may also sell this information to third-party companies for marketing or other purposes. Under the 1999 Gramm-Leach-Bliley Act, or GLBA, banks are required to provide their customers with a privacy notice that explains their information sharing practices. This notice must include information about the types of information that are collected and shared, the reasons for sharing, and the types of companies that the information is shared with. Secret number 7. Banks can freeze your account without notice. While banks generally offer account holders a lot of flexibility and convenience when it comes to accessing their funds, it's important to remember that the bank ultimately has the power to freeze your account if it deems it necessary. There are numbers of reasons why a bank might freeze your account, including suspected fraud or suspicious activity, a court order or legal judgment, or a request from a government agency or law enforcement. In some cases, the bank may freeze your account without notice, which can be a major inconvenience if you're relying on those funds to cover bills or other expenses. If your account is frozen, it's important to contact your bank immediately to find out why and what you can do to get it unfrozen. Depending on the reason of the freeze, you may need to provide additional documentation of work with the bank to resolve any outstanding issues. It's worth noting that while banks have the power to freeze your account, they can't simply seize your funds without due process. If you're facing legal action or a court order, you'll have the opportunity to defend yourself and make your case before any funds are seized or frozen. However, it's always best to work with your bank to avoid any potential issues in the first place. In conclusion, it's important to be aware of the ways banks can steal your money in order to make informed decisions about our finances. From the fact that we are losing money due to inflation and low interest rates, to banks profiting from loans, credit card transactions, and even selling our personal information, it's clear that banks are businesses that the main goal is to make a profit. However, this doesn't mean we can't take steps to protect our money and make smart financial choices. By doing research, reading the fine print, and working with trusted financial advisors, we can minimize the impact of this action and make the most of our financial resources. Thank you for watching Joseph Leopard Finance, your go-to channel for all things personal finance, investing, and wealth building. I hope you found value in today's video and that it inspires you to take action toward your financial goals. If you enjoyed this video, be sure to give it a thumbs up and subscribe to our channel for more content like these. And don't forget to hit the notification bell so you never miss a new upload. Join our community by leaving a comment below and let us know what financial topics you'd like us to cover next. Remember, financial freedom is possible for anyone, and we're here to help and make it happen. Thanks for watching. We'll see you in the next video.